Hi, I'm Louis. Is Inari still worthy to be invested? Inari's main business segments include outsourced semiconductor assembly and test service providers for the semiconductor industry, covering radio frequency, fiber optics, transceivers, optoelectronics, sensors, and custom integrated circuit technologies. Inari's manufacturing capabilities include wafer probe and processing, assembly, package test, and back-end. Inari's manufacturing plants produce over 5 billion chips annually. Revenue and profit. Between financial year 2012 to 2021, the revenue, profit before tax and profit after tax of Inari had been on an upward trend. In particular, the profit growth between financial year 2020 to 2021 was due to rising revenue from the RF business segment. Between financial year 2012 to 2021, the net profit margin of Inari mostly ranged between 10 to 20%. Especially in financial year 2021, net profit margin was up to 23%. Between financial year 2012 to 2021, the earning per share of Inari had been on an overall upward trend. In addition, the dividend distribution was also consistent. Furthermore, the amount of dividend distribution to shareholders was in tandem with the rising profits. Between financial year 2012 to 2021, the net tangible assets per share of Inari had been increasing, indicating that it has been investing in new assets to increase its manufacturing capacity. Between financial year 2012 to 2021, it is shown that Inari has been investing significantly in property, plants and equipment in order to ramp up its production capacity. Along with increasing sales, it is expected that Inari's earnings will also be rising in the coming few years. Between financial year 2012 to 2021, the return on equity of Inari mostly ranging between 10 to 40%, indicating that the management has used the funds available effectively to earn profits for the company. Between financial year 2012 to 2021, Inari's equity to liability ratio is mostly above 1, indicating that it is having enough reserve funds to pay off its loans. Between financial year 2012 to 2021, Inari's current ratio was maintained to above 1, indicating that it is having enough funds to pay off its short-term debts. Between financial year 2012 to 2021, Inari's cash flow has been on an upward trend, indicating that the company's finance has been stable and it is having sufficient funds for further business development purposes. As reported in 2021 annual report, Inari's new manufacturing plants is ready to proceed into production. These developments are likely to ramp up earnings in the next few years. Between financial year 2012 to 2021, it is shown that Inari's earnings has been on an upward trend. In addition, dividend distribution to shareholders has been very consistent. The past few years' annual report also shown a large increase in capital expenditure to increase its production capacity. This is also reflected in the increase in NTA per share value. Rising production capacity may indicate increased earnings in the future. Between financial year 2012 to 2021, Inari's return on equity performance was maintained between 10 to 40%. Between financial year 2012 to 2021, Inari's debt level has been relatively low, indicating that the company's finance is at a stable level. Between financial year 2012 to 2021, Inari's cash flow has been increasing and maintained at a healthy level. Overall, Inari has good performance in terms of earnings, financial stability, and management. The current PE ratio of Inari is around 27. Is it still worthy to be invested in? Also worth mentioning is that in September 2020, Inari launched the first in-house face mask production line at P1 plant in Penang, Malaysia. Inari has produced 2 million masks to date, which was distributed to employees, hospitals, and other organizations. Construction of its new plant, P55, adjacent to its existing P13 plant in Bayan Lepas, Penang, was completed. The 5-story plant with a total floor space of 49,000 square feet will be dedicated for RF test expansion and a new customer to assemble system-on-module products. Inari also completed the private placement of 333 million shares on the main market of Bursa Securities. The total gross proceeds raised from the private placement amounting to Rm 1.03 billion are expected to be utilized for capital expenditure, acquisitions and investments, and expenses in relation to the private placement. Inari met the globally recognized standards and qualified for inclusion into the FTSE for Good Bursa Malaysia Index for 2 years in a row since 2020. The F4GBM is a recognition given to qualified public companies listed on Bursa Malaysia Securities BERHAD, which has demonstrated strong environmental, social and governance practices. The inclusion into the F4GBM index represents an outstanding achievement by Inari for its strong commitment towards balancing profitability and sustainability. That's all for today. Feel free to share your opinions in the comment section. See you next time. Bye! The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis as well as follow up latest update information before making any investment decisions.